is a land of diverse cultures, timeless traditions, and rich heritage. Banking and financial inclusion of every individual plays a crucial role in the economic development of the country. However, the sheer, diverse, and expansive landscape poses a challenge for setting up of brick-and-mortar banks and financial institutions in every nook and corner of the country. There was a need to bridge the gap between a potential customer and the bank. Sabke in Hindi means for everyone, and in English it means below 1,000. The name symbolizes its vision of universal financial inclusion by creating technology-enabled touchpoints within 1,000 meters of every household.
What we do, we essentially link banks to last mile customers, the unbanked customers, in the regions where banks don't necessarily reach them in a brick and mortar fashion. So they tie up with us and we kind of find the right customer base, acquire those customers, do all the paperwork that's required so that the bank then onboards this customer and provides the services. Whether it is savings service, whether it is loans or any other payment services, we enable those things by acting as a bridge between the borrower and the lender or saver and the bank.
తీసుకోవాలన్న అనుకూలంగా ఉంది. ఆ బ్యాంకులో వేసి సమయం వృధా చేసుకోకుండా ఇక్కడనే అనుకూలంగా తీసుకొని మా పనులు మేము సాగించుకుంటున్నాం.
The way the model works is that we deploy a fleet of agents on the ground with typically local retailers who run their own regular shops. We try and convert them to act as or double up as a banker. Effectively, they become human ATMs. We hand out this low-end technology equipment, which is a mobile phone and a small printer, and they sort of then use their own cash, which is generated in their regular business, to be able to provide services to the communities around them. Over a period of time, we also added many products on this platform. We now give out loans in groups of women. We give loans to individual entrepreneurs. We collect savings. We do money transfers. We allow people to withdraw their account balances. So that's kind of how we have built the whole model, which is in a way a model that enables any financial institution.
Sabke's feet on the street and technology platform which it developed really helped the bank to go out and expand their operations in these areas. So over the last 5 years, we have grown 100 times. We are well recognized in the banking world. We have a good support from our investor team. We see that confidence keeps on growing. We have recently concluded 2 rounds of investment and investor confidence is really high on us. All this has happened in a very short while. There is no looking back from here. That's what I feel. We are growing and we are growing very strong.
Sabke has developed software applications that are integrated with core banking systems and work on mobile phones, allowing the users to perform financial transactions in a safe environment, eliminating the need for a traditional brick-and-mortar bank. The future of banking is digital, and Sabke is doing its bit in moving India towards a safer, more accessible digital space. With Sabke expanding its reach and its ever-growing customer and agent base, we are positive that the company's mission to connect every individual and household to mainstream financial system, thus promoting an inclusive and prosperous economy, standing true to its motto, Sabke liye samriddhi laye.
Hello everyone. A very good evening and a warm welcome to all our viewers on Zoom and Facebook Live. We welcome you to Basic Sabke Samvad, a webinar series where we facilitate conversations with social sector innovators, influencers, and
Samantha, you've gone on mute.
Right. Hello, everyone. A very good evening and a warm welcome to all our viewers on Zoom and Facebook Live. We welcome you to the Basic Sabke Samvad, a webinar series where we facilitate conversations with social sector innovators, influencers, and integrators. This is a tribute to late Mr. V. Nagarajan and late Mr. Amit Mehta, the founding members of the Basic Social Enterprise Group, both stellar personalities who have left behind a legacy and an imprint on the social sector. Thank you very much for taking out time and joining us for what is surely going to be a stimulating and an engaging session. This session is being brought to you by Sabke, a corporate banking correspondent that offers affordable, accessible, and scalable financial solutions to the underserved communities with high-tech and touch capabilities. Today's session will be in COVID times with Ms. Geeta Goel, Country Director, Michael and Suzanne, Dell Foundation. Also, we will be hosting a Q&A session in the last 10 to 15 minutes. Would request our viewers to post their questions in the chat boxes on Zoom and Facebook. Without further ado, I would like to call upon Mr. Shashidhar Tumuluri, CEO and MD of Sabke Impact Solutions, and our moderator for today's session. Over to you, sir.
Thank you, Namrata, and a very warm evening, afternoon, morning to everyone, depending on where you're calling from. And I hope everyone is keeping, staying healthy and safe. And thank you very much for joining us this evening. It is indeed a huge honor to have on this very special session of Basic Sabke Samvad with us Geeta Goel, who is the country director of Michael and Susan Dell Foundation in India. It is very special for us because we are celebrating our 11th foundation week for Sabke, and also it is a fact that 10 out of this 11 years, MSDF has walked the journey with us. So it is very pertinent to have Geeta bless this occasion, as we walk into the 12th year of our journey. As a brief introduction, Geeta, for those who are new to her, which I'm sure are very few of the audience, Geeta manages the foundation strategy and implementation in India. And the foundation in India has committed about $150 million, and with about 50 active projects that are anchored around the thesis of impact, scale, and sustainability. Geeta has represented the foundation on several boards of its investee companies, including the names like Ujjivan, Janalakshmi, Swadhar, Arohan, and the Micro Housing Finance Corporation. She's also on the investment committee of India Educational Investment Fund and Education Catalyst Fund. She has served as the chairperson of the Impact Investors Council of India in the past. In 2017, she was nominated as India's 30 most powerful women in impact by Business Today. An alumna of IIM Ahmedabad and Lady Shri Ram College, Delhi, Geeta spent about 12 years with corporate finance group of PricewaterhouseCoopers, advising large Indian and multinational clients on joint ventures, M&As, business plans and valuations before joining MSDF. Thank you, Geeta, for your time and willingness to share your insights and experience with the audience today. We are all very excited to hear you.
Thank you, Sasi. As I said, it's my privilege and honor to be here because it's been a long journey with Sabke, similar to many of our other partners. I mean, we do stay the course for a lot of our investments and grants. But each time, I think a partner hits a new milestone. I mean, we get vicarious pleasures out of that. So yes, I think we definitely feel like being part of the celebrations and the wins that each of the portfolio companies has. And I know you've given a fairly long introduction. So yes, why don't we dive into, some of the questions you had.
Yeah, I don't think it's long enough, but I wanted to save time. But thank you. I think the patience that an impact investor must demonstrate has actually been played out very well, especially with us. For just to remind the audience, today we are going to delve into the subject of how the impact investment priorities are shifting as we deal with the COVID crisis around us. It offers opportunities, while of course challenges are immense in this time. So while we dive into it, Geeta, I think it will be useful for someone like me who is very curious in the sense that having spent a good part of your career in corporate finance and the corporate world. What brought you into the impact world, and what led you to MSDF and your current role? Maybe the audience are also curious to know a bit before we get into the real topic.
Interesting question, because there was not one moment or one interesting story that I have to tell. I think it was a desire that built up over the years, and yes, maybe there was a magical moment when I made the decision. But just in terms of context and what led up to it, I must say my father was in the railways. I grew up in a small family in different parts of India. So I would say the first 20 years of my life, from Maharashtra to Bengal to Assam to Delhi to UP, stayed in several places, which just gives you a very different experience. And I always say that, I think a railways life also gives you both exposure to big houses in small towns and small transit accommodation in big cities. So you get to see different facets of life. So I do feel I think that experience was very useful, and I love to go to new places. I wish I stay long enough to see more. But I think somewhere in that growing up years, just the coming face to face with different inequities, either in income level, in geography, was a thought that stayed behind. But then, of course, I had a very, very standard, boring career path, as my children say, like, an undergrad in business, a master's in business, then you joined a consulting firm, couldn't get more standard. And yes, somewhere, I guess, at that time, I used to call it mid-career. So after 12 years or after 10 years in PwC, I started saying, am I really adding value in the space that I wanted to? And staying in Delhi, it sounds a little odd, but I would say that every time you see children begging on the street, it just hurts you to say, can you do more? And I think just having had a corporate career, one didn't know like what is the switch, how to make it. So I do think it was a little bit of good fortune. One of my bosses in PwC, Bharti Ramola, she was actually on the board of Basics. So my journey or my introduction to microfinance did start with Basics. And I think there I felt it was a very good transition, saying that I leverage my experience, my skill sets. It's a market-based solution, and yet it creates impact. So that's when, yes, I made the switch to the foundation in its very first year of being set up in India. Started in microfinance, and started, I would say, with more of an investment lens, and then gradually and very quickly moved into other areas, realizing the entire spectrum of philanthropy. So yes, that no single moment, but I think the fascination of this world pulled me here, and I think every day beyond that, which is now 15 years, has just been more rewarding and more learning for me.
Yeah, 15 years, quite a bit of time, and I didn't realize there is a Basics connection for your entry into the sector. So glad to hear that. Of course, MSDF has its own, I think, unique philosophy, and we live it every day as we're a part of this journey together. Maybe it'll be useful to throw some light on, why is MSDF doing what it's doing? What are the objectives? What is investment philosophy? What is the modus operandi, focus areas? Maybe very briefly touch base.
Sure. So yes, just as an introduction, this is Michael Dell's Family Foundation. It's not Dell CSR. It's family philanthropy per se. And really, when the founders set up the foundation, which was way back in '99, the whole idea was that we want to accelerate human opportunity. Saying, so it was the more equity and opportunity that you create. And I think the target was children and youth, saying that they really shape the future of the world. And if we can really ensure that every child and every youth has equitable access to opportunity, and then, allow the best talent to win or the best person to win. So it was really around unlocking more opportunities with a focus on children and of course a focus on low income. And in all three of our geographies, we did select urban as a, primary focus for us. So yes, I mean, stemming from children, each of the geographies have their own priority areas. In India, we look at education, livelihoods, financial inclusion. And across, I would say, our three programs, which, the three in sectors are very different. And yet for us, there are some common themes, which is to say that everything that we support, we do want it anchored around impact. That's our first principle. It should be measurable, it should be demonstrable. Almost anything that we support should be scalable. So you can see that as I move from one to the other, it was everything has to be impact, and then almost everything has, should have a scalable orientation, realizing just the scale of the problem that needs to be addressed. And again, a significant portion of what we support should be sustainable, saying that if the foundation, for whatever, I mean, it's a small foundation, if it pulls out, we don't want the work to stop. So we want to catalyze things that can stay on for much longer beyond us. So impact, scale, sustainability is one anchor of our work. The other piece of our work, I would say, is I think we are fortunate that it's a philanthropic foundation, and given it's a US foundation, it can also make investments in for-profit or market-based solutions. So we've said, let's be agnostic to the funding tool that we use or to the type of partner. So, the legal entity of the partner should not matter to us. For us, what matters is the impact at scale. So we use grants, we use investments, we work with, consulting firms in the form of contracts. And therefore our partners range from non-profits, for-profits, to even the government. So you're saying, we definitely do need to break the silos between Samaj, Sarkar, Bazaar. I mean, that's where, the intersection really creates synergistic impact. And I think we've seen that across the sectors, and I can talk about it. The only, and yeah, you mentioned we've invested about $250 million in India. We have about 70, 80 active projects, both, some impact balance sheet as well as some grants. And the only other piece I would say is, the common thread that runs across is, and again, it sort of comes from the founders, is to say, there's a fair bit of humility in saying that let's, the problems you're trying to address are fairly complex. Let's not go after the toughest problems. We're a small foundation. Let's go after problems that unlock maximum opportunity. So, keep your goals to what is achievable. Of course, be bold in that, but, don't go after things that seem most intractable. The second, I would say, there's a very high focus on execution. Again, coming from the founder's table, it's not about ideas, it's about execution. It's actually about delivering things before we, call it success. And I think stemming from 1 and 2 is patience, staying the course. So yes, a lot of our journeys are much longer than we thought when we started them. But we've also said that, we should be with our partners through thick and thin, and try and problem solve so that we get to the end of it. So yes, that's on the foundation, and a part of the foundation is around impact investing, which is your topic for today. So I just thought I'll give the broader landscape, and then we can.
That's very informative in the sense, one would not have seen the full spectrum in action at one time. For us, we did see the investment side happening, and to some extent the philanthropic, the grant part of it as a support activity. So, I as I hear you talk about the high the scalability and the high impact projects as an important area, sustainability, of course. But then when you choose your projects, right, for example, I take Sabke as an example, right, you really came very, very early in time. I don't know what Vijay Mahajan and Amit Mehta sold you, but at that time it was still a POC or maybe a pilot stage of the project, and there were nothing so much to compare with. I think those days it was more of the state of the art in that sense. I know. So that way, how do you then determine first, whether this is really going to scale and sustain, and at the same time, I do know that you've demonstrated immense amount of patience. There have been ups and downs through the journey, and you actually continue to support more rather in difficult times. I remember there were multiple rounds that you brought in. So I'm kind of trying to understand how this philosophy differs from maybe other impact investors or typical investors. The venture funds don't behave like that as you did. So, but you did more like venture investing, right? So, yeah.
So maybe again, I'll just take a step back and talk a little bit about our impact investing philosophy, and then I'll come to how we choose the projects. And in order to talk about our impact investing philosophy, I would say, I mean, the word is used very often, and I don't think there's a standard definition for it, and which does cause a lot of confusion. And in my mind, impact investing is actually an approach to investing. It's not an asset class. So it's not about risk return trade-off, social return versus financial return trade-off. It's a full spectrum from, concessional debt type capital to early stage VC type catalytic capital to, growth capital once you have proof of concept, to even market listed capital, for enterprises that are having impact. And I would say, given the need for it, I mean, especially if you look at, India's achievement of SDG goals by 2030, I think the estimate is we need at least $1 trillion from the private sector. And if we have to get it, I think we need capital in all of those buckets. All capital is good capital. I don't think we should pass value judgment on it. And every funder or every investor really identifies themselves along that spectrum on what they want to do and where their specialization is. And similarly, every enterprise also maps them to the spectrum so that they identify the right investor for themselves. So where would I place the foundation on that spectrum? I would say we are really almost on the left-hand side of it, between concessional to catalytic capital. And really the reason why it's like that, I would say when we started impact investing in India, Ujjivan was our first investment in 2006. We spent more on legal fees than the investment itself. So it's been a journey on that front as well. But really when we started, we realized that there was a gap on the equity capital side. There was a SIDBI that exists. There was PSL that existed. Loans was not that difficult for microfinance institutions, but early stage equity capital was. And especially in the area of urban microfinance, which was even more unproven, there was a gap. I think our own research and our own experience gave us confidence that it's a workable concept. It's worth putting money behind it so that we can showcase, the proof point, and then, get it to a stage where other investors can come in. Because again, scale was important. Foundations capital alone would not have been enough. So, can we come in early, catalyze it, show the change, get some proof points and get other capital in, and then start exiting. So that's, I would say, especially on our financial inclusion side, that really was the concept with which we started. Over the years, of course, we've also started doing impact linked debt and other type of impact investments. And which really gets me to the point on why we came into Sabke early. It was, again, catalytic, it was new. If there were, and again, for us, catalytic is not just in terms of the institution, but in terms of the product. So in urban microfinance, we did 8 investments within 2 years. all as almost the first institutional investor in. Similarly, I think we were very bullish on savings, but I mean, other than Sabke, we did not see many other strong models. And what we would look for, I would say, not just the idea. So I think some proof points, some product we wanted to say. So we were not an incubator or an accelerator. I think the entrepreneur and the team is extremely important in our selection process. With I would say two lenses. One, is social impact the driving force for the entrepreneur and therefore the team, and because at the end of the day, yes, you have to make a financially viable business, but you could really, if there were three paths, you may take one path which was not as socially attractive. So I think that was one. And both Vijay and Amit were definitely in this for the right reasons. And then second, I would say is for us, what's important is the focus again on execution and team building for the entrepreneur, because it will not be a one-man story. So, do we have confidence that they'll build it out? And then of course, the business plans, the diligence, all that matters. But really our first points will be, is there a working product prototype which has a market fit? Is, do we have enough confidence in the entrepreneur, both from a social and an execution perspective? And yes, and then I would say, do we continue to stick with all our investments and all our projects? No, there have been a few where we've called it quits earlier. Obviously, there are inflection points, and we come across them many times, because in the first 3 years of any early stage investment, there are many of those points. So where we decide to stick on and where we decide to call it quits is again, I think we are fairly hands-on engaged, especially in the early years. So I think sort of co-creatively problem solving with the team to say, okay, we've hit a low, can we get out of it? Will it be sustainable? Or are we throwing good money after bad? I think given our money is philanthropic, we just feel there's a much higher sense of fiduciary responsibility to ensure that it gets spent well, much more than financial capital, because this money is much more in shortage in the world than any other money. So yes, that's how we select our companies. And I would just add that, selecting companies only happens after we decide our program priorities. So we are not a fund like we will do 10 investments, which are socially positive investments, but each of our programs and sub-programs have some objectives, and the investments and the grants really need to fit towards that.
I think that's very much where you are leaving it, because I see when someone like you come in and believe in that idea, it becomes a lot easier for entrepreneurs to then leverage and perhaps raise new rounds. And of course, for us, it took a while until we get there, because we were going through ups and downs. But I think eventually it really helped. That confidence that you have shown in your investing companies have brought in more capital, not only social. For us, it's more social, but also I think the private equity and other investments also flown into the companies that we invested in. That brings us to the core of the conversation, right? So, staying on in a good times is always is okay, right? But now the situation is different. We are all in the midst of this seemingly unending, crisis, wave after wave. What are you noticing, right? One is about the peer investors that you continue to talk to, engage with. Are there any withdrawal symptoms? Are there any cautions within your own, investments? I'm sure there have been impacts that you have seen, both adverse, mostly adverse, I'm sure, but there's maybe some positive aspects also. So how is this whole paradigm changing from the impact that crisis has made on, maybe to some extent probably reversed some of those progress that has been made, and on the same time on the investors' priorities? Have there been a shift in the focus in the sectors that you want to invest, because there are essential services? Maybe agri is more important and more interesting, not so much in financial services because it's all NPS accumulating out there. How do you see this today's landscape and investment environment from impact lens?
So I would say, yeah, let me talk in terms of some opportunity or some positives that have emerged, and then some of the challenges that we are seeing. One is, of course, post-COVID, the digital wave has really taken off. I think fintech was already there, but we've seen it in edtech, skills tech, I'm sure agtech as well. So data and technology is a great move forward, which does enable access to the low income at a much more affordable rate, and doing bite-sized services, products. I mean, all that is enabled by technology. The adoption post-COVID definitely, I would say, has increased. Yes, there's a downside of digital divide, and we can come to that later. But I would say for a fair section of the society, the digital wave is a good step forward, which would make impact investments easier to some extent, or more viable. The second positive, I would say, is I think globally the focus on ESG, and then even within ESG, an intentional impact investment has increased. I would say we see much stronger headwinds for ESG right now, but I'm hoping in the tailwinds we will also see that for impact investing. But I think the consciousness of global investors, even SEBI is asking corporates to do sustainability reports. So at least there's a positive move, and there's more consciousness to it. The downside is we can get into greenwashing, all that, but I think every plus will have a downside. So let's just say more capital is more likely to be available. The challenges that I see are one, as I said, the digital divide, and I think the inequity is only increasing. Two, more and more people are slipping into poverty, and therefore, will we just do greenwashing by saying like, okay, we reached out, our target segment was people in the 25,000-30,000 family income, and will we leave out more people post COVID, and do we need to be very intentional now to be able to cover them? And and I think there, it might be the concessional capital, it might be some blended capital that helps us get there. So I would say that's the second part, which says, it's both an opportunity that yes, a new segment has become more available, but how do we reach out to them? And the third, I would say, is again from a challenge perspective, is I would say, yeah, maybe ESG takes more of the voice in the short term, and impact capital gets a little bit left behind. So yes, there is definitely more focus on higher returns, do good type investments, and not as much on, decent returns, but intentionally make a positive impact. So there is that. But where I feel like, there is a slight ray of opportunity is that more philanthropic capital has also become available. Now, can we convert some of that philanthropic capital to blended capital so that we can incentivize more impact? We can create more sub-asset classes which help us reach the lower income sections of the society. So I would say digital is one theme with a plus and a minus. ESG and impact is another theme with a plus and a minus. And then the whole piece around blended finance as an emerging area, more tangible sort of examples of that is the third theme, which can take forward from the increase in philanthropic dollars.
So from the investment preferences point of view, like, is there a shift in the sectors that impact investors are choosing or not choosing, given perhaps the unpredictability of what this crisis may have in store? And also, maybe you may want to touch upon a little bit on what are the things that I know that you're creating some coalition and trying to create some solutions, right? From both from your philanthropic side of it, but also I think you're creating some interesting instruments, create enhancements and things like that. So I think it'll be interesting to learn how the thought process is also evolving in the impact world. So both on the shifting focus on what is the sectors of preference and what are the new initiatives or innovations that are happening.
So I would say renewable energy, climate change, clearly emerging, for taking up a larger and larger share. I think in the developed world, it was always the case, but now even in the India context, we see that taking a larger share. The second, I would say, are sectors that could leverage technology. So EdTech, which wasn't in the past. I mean, fintech was always there. So I would say fintech will also take a fillip, but sectors that can ride the digital wave, again, will take up more attention. I actually see a complete loss of interest for brick and mortar businesses. In fact, even on phygital businesses, the interest has dampened a little. It may be like the new shiny object, which is, as I said, in the short term, it worries me because we still have the digital divide. But, I think the interest has shifted to more tech-based models, more digital models, and renewable energy. So that's on the shifting priorities. On how we are experimenting with or trying to launch different instruments, I would say just post-COVID, what did we do? I mean, last year, when COVID started, I did not expect it at all because we thought a lot of our grants will go into healthcare or livelihoods or social benefits. But at the end of the year, we realized that we had almost committed $15 million, which is like 3x of what we do in a year on financial inclusion and MSME loans. So, softer loans through recoverable grants, through concessional loans, So I would say MSME for us became a significant boost last year. And then related to that, we said, okay, where are the gaps in the sector? I mean, you could keep on doing loans and equity and you could do direct investments. And that's approach we've used across all our programs to say we do a few direct investments. Are there ecosystem gaps? Because we have flexible capital and we have grant capital, can we do more towards, pushing the bar for the sector? In education, for instance, our investments in assessments is an example of, doing something at an ecosystem level. In microfinance, we have done a lot around customer protection and, the social performance management. And in the MSME space, I think two things we did. One was to say, support a few initiatives that enabled more digitization or lower cost digitization. And we worked through CIIE in incubating some of those efforts. And the second was to say, because really what was constraining was, you can't access the customer, so you needed a digital medium to access. And if you could access the customer, the cash flow assessment or the risk assessment, the risk was high and the risk assessment was difficult. So last year, we actually launched a credit guarantee initiative, which would almost like a CGT MSE product, but which would for NBFCs, they could actually do some credit enhancement with this credit guarantee and make the business, I would say, less risky for them, but more importantly, unlock a new wave of growth there. And similarly, for credit assessment, we've been looking at, again, a few ecosystem opportunities on credit scoring, so that credit scoring and underwriting can, again, help more NBFCs, at least assess and manage the risk of lending to this segment. So yes, I think we don't get constrained by the funding tools or the structures. Our lawyers don't like us for all these reasons. But at the same time, I think, again, saying if we have to move the needle, more of the same will not work. We will have to think differently. So yeah, and I mean, before I close out on that, Shashi, I mean, I would also actually love to hear from you, not just the Sabke's 11-year journey, but more importantly, the 10-year journey with us and other impact investors, and just from an enterprise perspective, how you've seen, I mean, not just Sabke, I mean, you see a lot of your peers also, but just is there a difference interacting with an impact investor versus another investor? Where does one fit in versus the other? And yes, you can say very candid things about the gap areas for an impact investor as well.
Well, I didn't expect to be asked a question, but thank you. No, I mean, see, I think, like you said, right, you have a choice to make in terms of your three-dimensional scale. I think social enterprises also have, I mean, given a choice, sometimes choice is limited, but given a choice, they also would like to choose the investor, because there is a journey that we have to travel together. And we know that the challenges we are not taking up on are something that are solved, that are proven, right? We are trying to take up some challenges that probably will fail. I mean, we may not be able to succeed, but with a grit and with confidence, we go. And like you said, entrepreneurs matter, not necessarily the vehicle. And vehicles may change. The philosophy remains, but the process may change. So in that sense, we also like to have that conversation to understand how serious are they on the mission and the purpose. And of course, returns, everything is given, but the conversation is a lot about how they see the problem that we are solving aligning with the mission that the fund is also set up for. That becomes a very important conversation. And in the journey, we don't tell the investor that we don't like you, but we do move on in some cases because we know it's not going anywhere. This conversation is probably more about money than anything else. Then as an entrepreneur, I will probably have my own reservations about how the board meetings will end up to be and how the quarter-on-quarter results are going to be measured. But I do feel that not many enterprises would have the luxury to choose, because like you said, this capital is a scarcest among all the probably investment capital that is available. So from that point of view, there is more required. But I also like the fact that you said there is also some flexibility in the way at least funds like you who are balance sheet players are able to administer that innovation and the flexibility to solve for the problems of the day. Otherwise, most of the funds are also pretty standard, right? They have very little flexibility on what you could do with the money and what you can't. But with impact investors, I hear that, right? And also one important aspect for us was how much they're able to support us not only with financial capital, but also with whenever I require other support, some kind of advisory or some maybe a little bit of a cost sharing in certain aspects which were not anticipated. Then those are important, and those conversations also happen. Luckily we have been able to bring all the other investors who came right after you in the similar boat, and they support us quite a bit on not just the equity side of it, but helping through solving problems, strategizing, even bringing in expertise to the table. And those are a lot of value, and MSDF has been in forefront of that. That is very critical, I think, for social enterprises.
Yeah, no, I do say color of money is not green. I mean, different funders do bring in different colors.
Is there a disturbance? Geeta, everybody hear me?
I can hear you now.
So
I think there was disturbance. Yeah.
Okay, great. So I think I would like to just touch base upon the whole portfolio approach that you take, right? Of course, every individual investment is different, and there's multi-sector approach that you've taken. But then, how do you kind of prioritize on a programmatic level, and making sure that you're also aligned with the overall ecosystem changes that are happening, and trying to make sure that you are moving the right direction, while sometimes individual investments may not essentially look as if they are aligned every time. It's not possible. So maybe some understanding of how you manage at the program level.
Yeah, maybe I'll just take 2 minutes on that. So yes, if I just take our financial inclusion portfolio, as I said, in our early years, we said we want to catalyze urban microfinance. The whole focus was around that. Let's do a few, and always I think we start with direct grants or investments, and then 1 or 2 year period, wherever we feel there's an ecosystem gap, we start putting in money there. So customer protection and all came in that. And then the ecosystem moved much faster than we expected. I mean, I frankly thought it would take 7-8 years before a commercial investor walks into Jeevan. And it happened in, I think, 3 or 4 years. So we rode the wave and, we started exiting. So we said, okay, we had thought we will stay with this portfolio for 8-10 years. But really, philanthropic capital not needed, market is catalyzed, let's move forces. So I think those are decisions one takes based on what's happening in the market, and you can't stay put on your own goals. And that's when we started moving towards loans for water sanitation, realized, did a few projects, realized it was not easy. There's a lot of government interaction, many other challenges. So stepped back. Micro mortgages, I think, was a similar history as urban microfinance, picked up much sooner than expected. So just did 2 investments and then withdrew. And then MSMEs, where we are today, where the focus is direct investments, let's plug in the digital gaps, let's plug in the risk assessment gaps and the risk management gaps at an ecosystem level. I think this journey will last for another 4 years, but I would be happy if we wrap it up in 2 years. Sorry, Sasi, are you still there?
Yeah, I'm so sorry, I lost the connection. I don't know when I lost you, but
no problem. No, I was just ending with MSME.
Yeah.
Yeah, now I can hear you, and I don't know whether
my signal is choppy apparently. Yeah, it's really. Okay, so anyway, we're getting closer to the end of this session, so I just want to make some room for if any questions are there from audience. If anybody wants to come up to share some thoughts with you, we could do that. Pera, you have a question that you wanted to ask? You're trying to type something in the chat. Should I unmute you? 1 second, let me unmute my colleague who's trying to ask a question.
Yeah, thank you for giving the opportunity. So Geeta has already mentioned about the future investments might focus on fintechs and FIs, will not go away. But my question is, since I have seen some of the news in the last 1.5 year, where we are hit with the pandemic, the more focus has been towards the food, health, education, that is, which are essentials that which we can talk. What will be the investment horizon for our MFIs in the coming near future as well as the long-term future?
No, I think great question. I would, my sense is, especially on the food side, we may see more philanthropic and government-based support rather than, financial investment support. I mean, yes, I think the work in agriculture investments will continue, but more in terms of the essential supply. And similarly, I think in EdTech, we may see a lot of capital coming in. Only some of which may be impact capital, but a lot of other capital will come in. I mean, today Byju's is the most valued education company in the world. And that's all. A lot of it, or a significant part of it, is market capital. So I would say, I don't think the flow of impact capital from impact funds, which have those typical 10-year lives like, Caspian or an Elevar or a Unitas, I don't see them reducing the focus on financial inclusion. So you should not worry about it going away. Yeah.
Thanks for giving that comment. Anand Raman, colleague from CGAP, wanted to ask.
Yeah, thanks, Shashi. Thank you, Geeta. Very fascinating. Just, I wanted to understand a little bit more about this coalition that was briefly mentioned. What is the object, and is it a coalition of funders alone, or is it a coalition of, like you said, you also work with technology partners, and MSDF was a member of CGAP for some time and has not been now. So I was just trying to figure out what's the structure of the coalition and what are its objects.
Sure. No, I think the coalition that Sasi referred to was more around a project that we had incubated for partial credit guarantees for MSME lending. So it's really not a coalition now, it's a company which has 4 investors. So very soon it will become an investment rather than a collaborative. But yeah, no, I don't think there are any fintech type collaboratives that have come up. I know we've helped incubate a few collaboratives on life skills and edtech on the education side, more with donors than with investors. But yeah, nothing to compete with the CGAP.
No, I wasn't saying compete. I was just hoping
Yeah,
collaborate,
yeah,
but yeah.
No, nothing. Unfortunately, not much that we see.
Okay, thank you.
Thanks, Anand. So while maybe some questions may be coming in, Geeta, I kind of got disconnected. I wanted to ask a question on the whole assessment side of it, right? I know it's for impact investors, customers are most important, and what's the ultimate social impact that happens. So can you throw some light on how do you see impact measurements and assessments that are being done maybe in these days more specifically, but generally as well?
Yeah, so I would say, I think, we look at impact assessment at maybe 2 levels. One is just operational indicators. So if I just take financial inclusion and MSME, the number of loans given, the income segment, was it new to credit, so just making sure that it goes to the right target segment, and then whether there has been a dropout or a renewal, and the performance. So I would really call them operational and the first level check. The second level check is really the impact of that loan. Some data we do get regularly from, some of our investees like you, like Kinara, where we do see year on year, has there been an increase in the income level of the enterprise or the number of jobs that they have created. But, we were not, I would say, getting a lot of robust data on this. And we realized it's not easy to collect it along with your loan cycle. So we just launched an impact assessment exercise with IFMR Trust, which will be a pre-post over a 2 to 3 year period, really to take a sample base of clients, but just understand, where is the impact happening? Is the money really going into the business? Is it going into the children's education? Are the children actually shifting their professions? Is the impact more transformational, etc. And does the impact happen more at enterprises which are 50 lakh annual turnover or 1 crore turnover or 1.5, more for the informal versus the formal? So I think those data sets were really not available. So we've just launched that exercise. Unfortunately, it will take 2 years before the results are out. So yes, but yeah, for us, impact assessment is important because, again, as I said, the capital is precious. It better deliver the results which were intended. And if it's not delivering results, then I'm just saying it's a financial investment and we can let the market invest in it.
Thank you on that. So one question that is coming, that came in, Sanjeev, do you want to ask the question directly? I can unmute you. Maybe this can be the last question.
Hi.
Okay. Yes.
Yeah, Geeta,
Yeah.
this is
Yeah,
insightful conversation. So my question is very direct. Basically, COVID-19, which we are actually experiencing for last 1.5 years and significantly impacting the social enterprise and businesses in terms of the financing front, as well as the social return on investment with whom we are actually working. So what would be your advice, and particularly for the social enterprises, for the readiness for future? Because pandemic, it will be happening frequently in coming days as well. So what would be your advice, particularly on the financing as well as the operational front and the social impact we are actually creating at the ground? Thank you.
Yeah, I think great question. And it's difficult to give like a one size fits all response, but I can give you examples from our own portfolio. There were businesses that were brick and mortar businesses, especially in our education side, where you had centers where children were coming, either for skill training or for education. And for 18 months, they're lying closed. And these organizations are not large enough that they can pay for rentals and teacher salaries and this thing. Despite being an impact investor, we also said that we have to have some pivots in the business, because otherwise, because you're not creating impact and you're only hiring the teachers, but you're not teaching the students. So unless, so I think there were nudges, and the entrepreneurs shifted somewhat to phygital or digital means, and then it, made sense to survive, or it was sustainable. And some entrepreneurs have just said that it's like, let's shut down the business. It is not viable, and it doesn't make sense to just elongate the life. So very tough choices have had to be made. I mean, I applaud the entrepreneurs who've done that. I think we have to accept the changed reality, see whether the business model works in that changed reality. If there is no financial viability of it, then I'm saying you can even take a grant-based model, but then that has to be a different model. So, continued financial viability, at least over a 2 to 3 year horizon period, should be evaluated and is important. Did that address the question? There's not an easy answer for it, but yeah.
Yeah, thanks. At least partially answered, and it's a very, we are expecting much more. Thank you.
Thanks, Sanjeev. That was supposed to be my last question, so thanks for asking. But I know there's no right answer to this. There will be partial answers to this question, and we're all learning as we go. And patience, I think, still is being exhibited, as I can myself experience with investors. There are no hard questions because we're facing hard enough problems right now. So we'll probably learn as we go and evolve and adapt to the changes.
Yeah, Sasi, I would just add that a few things we learned from the microfinance crisis also, because and the demonetization crisis, is that if there's a crisis, you cannot continue to do what you've been doing. Patience is important, but the adaptability is extremely important. And funding is very, very important, especially in times of a crisis. So I think, always trying to have enough in your bank. Crisis is not the time to say no to any type of money. So,
yeah, with that, I think a very positive note. Geeta, I cannot thank you enough. You have really made our anniversary celebrations, over the top. Thank you so much. More so for being a partner in this journey, not only for us, for many well-meaning enterprises. They all rely on people like you to come and support, and you've been doing that fantastically. And thank you for sharing your experience and insights. I'm sure the audience today have really enjoyed hearing you and learned a lot. Thank you again. And
great to be here. Thank you. Yes, all the best. Thanks, Sachin.
Thank you. Over to you, Namrata, for a closure.
Thank you everyone for joining in. We hope you found this session to be informative and could understand the current scenario of impact investing. We will be hosting more such sessions in the future and hope you will join us then. To stay updated about the upcoming sessions, please follow our official social media handles, the links of which are being shared on the chat box below. Thank you again for joining. Stay safe, stay happy, stay healthy. See you. Thank you.
Thank you all. Thanks for joining and have a good weekend. Thank you.
नए जमाने के नए हैं रास्ते, लाए हैं कुछ हम सबके वास्ते, सुनेंगे सबके दिल की बात, रहेंगे साथ दिन हो या रात, हम हैं सबके साथ हैं, हम हैं सबके साथ हैं। किसी भी दिन की हो जरूरत या व्यापार हो आगे बढ़ाना, जब सबके का हर पल है साथ, तो साथ ही भला क्यों घबराना। दिल में ठान, करेंगे पूरे सबके